Thank you very much for choosing to watch this video. You can also catch this as a podcast, transcription, or article on cruxinvestor.com. And of course, for our Crux Investor Club members, you get access to company reports, very detailed institutional grade reporting. You get free training videos. You get commentary from market experts from all around the world. And of course, we do interview summaries to save you time should you wish. We caught up earlier today with Verran, who's the CEO of Fortune Bay, TSX-V listed gold explorer with assets up in Canada and also in Mexico. They're going to focus on their 2011 PFS in Saskatchewan, dust that off and see if they can update that. They're also looking at a mineral resource expansion and a little bit of exploration too. But with 1.8 million bucks in the kitty, they're going to have to be careful with their money. Looks like Mexico is probably going to be a JV situation, and they're going to look at what they've got today and try and understand what kind of JV they can create. So lots of interesting problems they're trying to solve. Dale's obviously come in recently in the last 3 months or so, having worked for the last 7 years for Denison mines in Saskatchewan. So he knows the area well. Gold's obviously new to him. So we looked forward to hearing his views about the challenges ahead. So do take a look in the description below at some of those topics. Anything interests you in particular, click on the number beside that topic. That's a timestamp. I'll jump you through to that part of the interview. Otherwise, sit back and enjoy what Dale has to say. Dale, how are you doing, sir?
Good, thanks to yourself, Matt. Thanks for having us.
Yeah, well, thanks for coming on the show. It's first time, right? We haven't spoken before, and new story, so I'm really pleased. I love a news story. So does everyone watching this. And you're going to tell us all about it, but tell us, where are you in the world, first of all?
I'm in Kelowna, British Columbia, in Canada.
Oh my goodness. Right. I know Kelowna. It's beautiful up there. They got the mountains, you got the lakes, you got the vineyards. Very nice. You been there long?
Yeah, fantastic city. Nice to be based here.
Yeah. We nearly built a hospital there a long time ago, but we had some differences with the First Nations there, and we had to walk, I'm afraid. But yeah, absolutely beautiful. But you don't sound like a local though.
No, I'm originally from South Africa, born there, schooled there, studied, worked in Africa for some time before moving across to Canada.
Fantastic. And what brings you, have you been in Canada long? I mean, how long have you been working?
Yeah, about 7 years. So moved across, worked in Saskatchewan, based in Saskatchewan for Denison Mines Corp, a London company.
Oh, very good.
And then more recently moved across to the gold space and Fortune Bay.
Ah, superb. Okay, well, my regards to David Cates. We like him. He's a nice guy. So you can tell us today about Fortune Bay. Like I say, news story. So why don't you kick off, give us that 1 minute overview of the business, and then we'll pick it up from there.
So Fortune Bay is a gold explorer and developer. We listed on the TSX-V under the symbol FOR4. The company has 200% owned projects, gold projects, located in Saskatchewan, Canada, and in Chiapas State, Mexico. Combined, the projects host 2.1 billion ounces in measured and indicated, and 0.9 million ounces in inferred resources. Those are historical estimates. And both projects offer significant exploration upside and development upside. These projects have been under the radar for some time. They've been inactive. And recently we set out on a path to unlock value in these assets. Just over a month ago, well, I should say in end of July, we announced plans for the Goldfields project, to advance that through various exploration and development activities. And that's expected to deliver numerous catalysts over the next 12 to 18 months.
Right. When you say underexplored, you mean no one cared that they existed? Is that what you mean?
Yeah, I think, we went through a lull in the gold market, from 2011, we had a bit of a false start, 2016, and obviously seen the gold market pick up significantly recently. So it's, been brought on to get the company moving, the projects moving, and it's certainly a really exciting time to be doing that.
Well, it's certainly an exciting gold price environment to be doing it. Is this just another one of those companies that's been dug out of the cupboard and put in front of people and hoping that you'll find enough investors who'll put money into this to give it a chance?
I think the companies, these are really exciting assets. The company went through a whole bunch of different transactions back in 2014 to 2016, when the current company was formed in its current form. And since then, there's been a lot of interest in these projects, but no actual work done. And obviously, with the uptick in the gold price, it's really excited the board to get the projects moving. And I was brought on just over 2 months ago.
Yeah, so I know you're relatively new. I mean, your background, you're obviously a uranium guy, but coming into this gold environment, must be a welcome relief compared to uranium the past few years for sure. But when you say when the directors are excited, I bet they are, because it means they get salaries paid, they get lovely options here. But what I want you to be able to tell me today is that this isn't just another opportunity for investors to be, fleeced out of their cash by, you guys pitching a story which has got no chance of working. So what is it that we should be looking for? What have you been brought in to do, first of all? What do you think you're going to be able to do for these assets which other people couldn't do?
Yeah. I was really excited, with this opportunity when it came across my desk, just firstly in terms of a company in today's market with gold resources on the books at decent grades. They're both open pit targets. A company that had, the projects hadn't had much done on them, and the gold price having moved up so much. At the Goldfields project, there's already a PFS that was done in 2011 that had robust economics. Obviously we know what happened subsequent to 2011 with the lull in the gold price. But we've started to look at all that in detail, and really impressed with the work that's been done there, the quality of the work. We've had independent consultants come on and review that PFS, and it's a robust study. The real exciting part is we get to build on that study, and it's a study that was done using a Canadian gold price of $1,250 an ounce. Today the Canadian gold price is more than doubled, sitting at around $2,600 an ounce. So, on that basis alone, it's a really exciting project to move forward in this market. But obviously things have to be re-looked at in terms of CapEx, OpEx, and that's not even including what we see on the exploration side. There's a lot of potential around both the deposits on the Goldfields property, both Box and Athona.
Okay, 2011 PFS. Obviously it wasn't a great time, 2011, 2012. I can understand why it got boxed up. What are the relevant numbers from the PFS that you can talk about today? Because I'm trying to understand the economics in today's environment, because a lot of things look good in today's environment, but what are you able to help us with?
Yeah, so the 2011 PFS, it's envisaged an open pit mining scenario of the Box and Athona deposits. Box going first, having approximately just over 70% of the resources. It's a 13-year mine life with a mill capacity of 5,000 tonne per day. Gold recoveries at the Box of 89%, Athona 91%. In terms of the economic highlights, using that gold price of $1,250 Canadian an ounce, there was the capex was 159 million using a 14% contingency. The NPV produced was $144 million. That's a pre-tax NPV at a 5% discount rate, and the IRR produced was 19.6%, also on a pre-tax basis. So those economics are certainly robust. Obviously, in today's terms, we need to plug in a new gold price, but we also need to relook at those capex, opex costs and make sure they're going to be realistic in today's terms.
Okay, so before we get into that, talking about the corporate structure, because I'm trying to understand the plan, as it were. How are you going to move this thing forward? So start with the corporate structure. So, who's involved, who's got what, how much money have you got in place?
Yeah, so the corporate structure, this company was run by our chairman, Wade Dorr, who goes back, to the early 2000s when he started Linear Gold Corp. They had success, went into Brigus Gold. Eventually, Brigus merged with Apollo Resources, and that sold to Primero. That was a big success, and it's out of that transaction that these assets came into place. So Wade's, still on the board, and he's helping drive the strategy forward. The company's well funded. We've got a lot of insider ownership. The both board and management owning around 19%. So there's a strong alignment with shareholders there. And really excited to take our strategy and put it into our projects and, execute on that.
Okay, but like I say, talk to me about how much cash you've got available, or what the process will be for raising cash. Because again, if I'm looking back in, as recently as May this year, you're 15 million market cap. Like there's nothing exciting here. So have you been able to raise capital? If so, how much? What are the plans?
Yeah, we raised, going back to May, we raised $2.7 million in hard dollars. And, that's been used to fund the company now through various activities. And that's, our current cash is around 1.8 million. That's going to see us well into next year in terms of what we're doing on the technical side. We have some field work planned for September. We initiated a mineral resource estimate. We're doing a PFS high-level review. Various activities on the go, but we are looking to drill, really as soon as possible at Goldfields. That's going to require some additional funding, so we'll look to the markets later this year and look to, obviously flow through financing would be attractive. We haven't decided on exact amounts yet. We're still in the process of looking through the data, defining drill targets. That involves creating new geological models for the Box and Athona deposits. That's going to guide our exploration, and we're going to be able to put a really solid plan around that, look at what it's going to cost, and then we can look to, raise the money for that project.
Okay. Wayne Dorr, he must have learned from the past. It's like, you've got to hit the market at the right time. Obviously, this is a very good time to come back into market with this project. You've got 1.8 million bucks. You talk about lasting you till next year. You may need to raise some money to do some drilling later this year. You'll work out what that number needs to look like. You're going to have to get your foot down. You're going to have to accelerate this if you're to take advantage of the current environment. Are you under any pressure from Wade to do that?
Now, of course, there's a strong drive from the board to move this project. We have an aggressive strategy, but we realize that a strategy is realistic. One advantage in Saskatchewan is that it's a great place to operate. Everyone knows that. It's the top-ranked jurisdiction in Canada. And, my experience there with Denison Mines Corp, having done lots of drilling programs in northern Saskatchewan and studies, familiar with all the players in the space, and we really have a good plan to advance that quickly. And we're not just, we differentiate ourselves from other companies in that we're not starting a PFS from scratch. We've got so much great data to build upon. There's been so much good work done in the past. So we really feel that allows us to fast track this project in terms of both advancing it along the development path in terms of a future PFS, but also in terms of exploring the project where we see a huge amount of potential.
Okay, and what sort of company are you going to be? Because obviously you're going to dust off the PFS from 2011, spend a bit of money reassessing that, and then potentially update that, right? That'll be a nice quick win, and certainly in terms for the market. Yeah, is that the idea?
That's
right.
That's the right. The immediate focus on Goldfields and doing that. Absolutely.
Okay. What happens when you get the PFS? Do you go, okay, that's fantastic, we'll now go down to Mexico? Or do you keep working that up, or raise some more money and try and develop both? What's the plan?
Well, in Goldfields, we're certainly going to keep marching down that development path and continue to de-risk the project. We want to create a project that's going to interest a mid-tier miner. And it's certainly, once we've done a PFS, we'll be, in tandem with the updated mineral resource estimate, followed by a potential future PFS, we're going to be doing exploration. And, based on those results, we can then look to include those additional resources in either an updated PFS or put it all together into a feasibility study. But, if we create a good project in a good jurisdiction, we believe there's going to be interest as we move down that path.
There's going to be a lot of interest in a lot of gold developers. It's a question of how do you stand out, because it's fairly low grade. It's not a particularly big project, so the mid and large caps are not going to be looking at you. So what's your plan for growth for this company? What are shareholders buying into?
Well, in the short term, you're buying into Goldfields. That's our main story. That's where we're going to focus. We're not going to confuse shareholders with lots of different assets where we have this vast portfolio. We're going to have a real focus that's got a catalyst, and we're going to move that project forward as quickly as we can. Obviously, creating a good project, you're going to have lots of favorable opportunities, outcomes down the road, and that's going to create value for shareholders. At Exwitan, it's a fantastic project, great asset. It's not as advanced as Goldfields. We can't move that down the development pathline as quickly, the exploration pathline. So we currently looking at that project in detail. We're looking at the data, pulling it apart. There's a lot of opportunity, a lot of value to be unlocked, lots of exploration potential, development upside. And we're looking at various options to advance that, and we may not advance that necessarily ourselves. We might look to find a suitable partner that can advance that project for us. And that's obviously finding the right person in the right company, the right operational capability, financial capability as well.
Now or down the line?
There's certainly been a lot of interest in the project going back prior to me joining, and currently it's a great asset. The people who know about it know it's a good project. So there's certainly interest in it, and we just need to look at evaluating potentially a suitable partner, and then seeing how that unfolds over the coming months here.
Plus, you don't have the money to do too much with it yourself.
Well, that's right. Capital is valuable to us, shareholder capital. So we want to really allocate that where, in the short term, we can use that effectively. And, at Exwitan, we certainly, see the value to do that, but not at the same time necessarily. And that's where I think the value could be in sharing some of that risk with another suitable partner and focusing our story on Goldfields in the short term.
And so what happens to the team down there? Would you look to partner? What sort of deal would you be looking for, or have you even thought that far ahead?
We're open to various options at this stage. It could be anything from an outright acquisition, where we could use, if there's some cash in that, cash and shares, we can use some of that to even fund Goldfields in the shorter term. We'd also be open to earn-in option agreements. There's been earn-in option agreements on the projects in the past. Kinross was there 2007 to 2009, and they did the last real significant work in terms of drilling on the project. So there's been those types of arrangements in the past, and we'd certainly look to attract a partner to do something similar in future.
Okay, so with the recent bump in the share price, where do you think the market's attributing value? Are they giving you any credit for Mexico, Exwitan?
Absolutely. I think there is value in there. It's hard to answer that question. I mean, we don't have analyst coverage yet. It's still early days for us. So it's hard to see exactly where the market's putting the value. I think the value is in our story of having two advanced projects and having a plan for one of them in the near term with another one, a little bit down that pipeline.
Two advanced projects. Okay. Do you seriously think these are advanced projects?
Well, we consider them advanced exploration projects in that sense. Gotcha. We're not a junior explorer. We're not going out and doing greenfields exploration. We've got two assets with resources, and we're looking to expand those resources and take those projects through development stages to de-risk them.
So what do you think you need to deliver before you can go out and raise this money at the end of the year? What are the deliverables that the market's going to give you some credit for, hopefully at a higher price?
Yeah, I think, where we stand at the moment, we've got these good assets. I think with Goldfields, we're basically putting together geological models. The project going back to 2011, the models that were created, they were very simplistic. And, the exploration was done just on chasing mineralization. There was no emphasis on understanding the structural controls on these deposits. So, by us developing good models that can guide exploration and demonstrate targets on the deposits, I think that's going to help us, raise that money.
Okay, so just in terms of that 1.8 million that you've got left, I mean, can you sort of break that down and how you intend to spend that between now and the end of the year or into next year?
So we've initiated a mineral resource estimate, mm-hmm. and that process really involves us. We've got to put together a technical team. We've got a technical director and a senior project geologist for the Goldfields projects. So we're really pulling apart that data. We putting it into solid databases, We reviewing that in detail. That's obviously taking time. We're doing a QA/QC on that, and then we'll move into a fieldwork stage where we'll be looking at the rocks. We'll be doing a historical core review, looking at the outcrops, some of the trenches, and building these geological models. And that's going to form the basis for a mineral resource estimate. So a lot of the spend over the next while will be focused on our field activities, our involvement with the data, and then leading into a mineral resource estimate. At the same time, we'll be allocating money to a high-level PFS review. We've started that process, and we've done an initial exercise to look at the PFS. We'll be continuing that through Q3 and Q4 this year to basically look at where the opportunities and risks are with doing a new PFS, and also identifying any data gaps. So when it comes to next year, we combined with our a potential drilling program, we'll also be looking to collect any additional data needed to go toward a PFS study.
Okay. In terms of your hopes for how this progresses and what the timing is, you've said you've agreed that probably should take advantage of the current gold environment. It should be an accelerated time frame, but you only had your feet under the desk for a matter of a few months now, right? So what were some of the things that you saw when you walked in that made you nervous?
When you come into on face value, you look at the company's assets, you pull the tech reports of CDAR and you have a quick look through and you think, well, this looks great. But of course, when you're looking at a resource estimate at Expertime going back to 2006, the PFS, which includes the resource estimates for Goldfields going back to 2011, you open these up and you think, well, you think, what am I going to discover here? Is there going to be any skeletons in the closet, so to speak? And what we found is everything's been really well done, and this is not just coming from our company side, but from independent consultants. Certainly at Goldfields, the PFS that was done is a really robust study. It was the feedback we've had on it has been very complimentary, and on top of that, we are seeing opportunities in that PFS for creating more value on the project and improving the economics.
Right. So again, you haven't been here that long. It feels, I think the market is saying, well, okay, there's possibly something here. I mean, the share price has reacted quite strongly after you did your fundraise. They're buying it. They're buying a lot of things. Are you at all worried that if gold falls back or resets a bit, you're going to be left behind?
Well, I think we've already seen there's a robust project there at 12.50 Canadian dollars an ounce. So I think we've got a lot of buffer to work with, So we're really confident that with what's in place already in terms of that historical PFS, plus the exploration upside, we can really create a much better project here. The exploration itself, we're seeing high grades that were drilled below the resource estimate that haven't yet been included, and it's open at depth. This is at Box, and there's similar exploration potential at Athona. So there's lots of ways to grow and improve this project. And so I think even if the gold price does pull back, I think we're in a really strong position to advance on an existing PFS that is robust.
Okay. So you've come in. Have you bought any shares yourself?
Yeah, I have bought 60,000 shares.
Okay, cool. You've been given any?
Not given any. Obviously incentivized with some options that are linked to certain performance objectives, but those I bought with my own money. Well,
that's interesting. So what sort of objectives do they set you? I mean, obviously that's what you're going to focus on, right?
Well, yeah, it's all about creating shareholder value there. And
what's that mean? What's that mean? People say that all the time. What's it mean?
Well, you want to get the share price up, grow the market cap of the company as well. And, those objectives are very much aligned with the path we've selected. When I came on board, we had some really good strategy sessions, and we decided how do we move these projects forward, and that was rolled into, my performance incentives and, our broader teams. And, the boards, also has a significant ownership in the company. So we feel very much aligned with shareholders to move this forward.
No, that's great. But I appreciate that, right? That's good. That's a good thing. But what are the other things that you are incentivized by? What targets do boards set CEOs? I'm intrigued. Because there's lots of different ways of getting people to get focused and deliver. But in your case, what was it?
Yeah, it's really about, there's technical objectives that to deliver value on the project, both in terms of resource expansion, in de-risking the project through studies, those types of initiatives really to move the projects forward. Our company's got a commitment to really putting money in the ground, not having a lot of necessarily corporate type spend overheads and that, but focusing on the ground. And we believe if we explore well, add ounces with the drill bits, de-risk the projects, the value is going to come for us, and that's where we're really focusing shareholder money, and that's where we're going to expect to get the best returns taking that projects forward. Okay,
Dale, thanks for that. Interesting story. I mean, like I say, you've only been there, 2-3 months, not so long. It'd be interesting to, see how you get along, see how the market reacts, and like I say, if we dust off that PFS, it'll be hopefully a significant moment for you guys going forward. So appreciate you spending the time today talking us through it.
So thanks, Matt. Thanks for having us.